Well, hello there, Maverick traders. This is Rob Reinhold. It is February 25th. Let's go ahead and jump into it. All right, today we had another down day, and it really started off with, again, we had a big sell-off on Friday. We had another little bit on Monday, and then a continued sell-off on Tuesday, and we got another consumer sentiment report. Now, that was what started this selling last Friday. But we got a different consumer sentiment that's basically showing the same thing, that consumer sentiment is plunging. People are having a more negative outlook on the economy going forward and a more pessimistic view on inflation coming down. Exactly what the market does not want to hear. And because of that, we actually saw the 10-year bond yields go the lowest they've gone for all of this year. So I talked about this over the weekend, how falling bond yields, I know we like them all. We all like to see lower interest rates as consumers, but a plunging bond yield is a sign of distress. So what did that mean for the final numbers at the end of the day? Well, the Dow was actually positive for the day, but everything else you can see was negative. Now, these are off their bottoms. So they recovered about half of their losses. So at one point, the S&P was down about 1%. It closed down 0.5%. The NASDAQ was down over 2%, closed down just over 1%. So yes, there was a recovery. We're going to take a look and see that on the charts, but we still have a lot of selling at the moment. When we take a look at the advanced decline line, it was not a nasty day. Just a few more sellers and buyers. We take a look at how many stocks are above or below their moving average. We've now gone to a more bearish tone. And that's exactly what it mirrors here in the chart, is that, we were bullish. We were seeing lots of bullish movement until we broke down. Now we're below the 50-day moving average. We're below the 20. But look, if you've heard me talk before, I call it blur your eyes a little bit. Some people are very literal when they look at a chart, very literal, like to the penny. And we know that we get sometimes a day or two where it breaks below moving averages and then pops back up. We know that sometimes we get just long lower shadows. So basically, I'm trying not to hyper react to every single little tick and try to really back out. And what I do see here is I do see we are still in this range. And I talked about how 59.40, that's a really key level hold, and you can see it held today. So at this point, it still is a neutral outlook overall. Yes, if you want to say that it's bullish or bearish, it's a tinge bearish here. There's no question about it. But look, we held. Come over here to the NASDAQ. Really, same thing here. We're still in the range. We're in this range here to where it has really just done nothing and gone sideways. Heat map shows that there was, some good pockets here, some bad pockets there. Nothing really telling us anything. Look, my outlook has been either like plus 0.5 or negative 0.5 for the last little bit. Not really looking to go really bullish or bearish here. And I think that's just where we stand at the moment. If we break down and continue to go lower, yes, we will then go to more bearish outlook. But right here, right now, I think this is about where you have to be, is right around the neutral, maybe a little bit bearish. So let's go ahead and take a look at some potential trades. I've got one sideways, two bears here. The first one I want to talk about is Etsy. So Etsy has really kind of avoided the overall market fall here. And that's what I do like, is we see that we have a real nice sideways pattern here between 51 and 57. Earnings are out of the way. We had the earnings report about a week ago, and it had a gap down. But you can see we've really held into this level here. I'm looking at this to just stay right in this level here. So that's where I want to make my profit window, is basically 52 to 55. So that means that I'm going to have to pick either a 53 or a 54 midpoint. I'm going to pick the 53 midpoint because, again, the market is a little bit bearish here. So I don't want to go up to the 54. That would be a little bit bullish. I want to stay basically right here. So I'm looking at the 50, 53, 56. Butterfly on Etsy. Looking for this to maintain its sideways trend. On the bear side, this is Capri Holdings. Now, the consumer sector is the weakest sector at the moment. So I definitely like the fact that this is in the weakest sector. And you can see it is right there at the support line of 20. Could we bounce up? Sure we could. We could absolutely have a little bounce. That doesn't scare me at all because I'm looking to go out about 2 weeks and I'm looking to do like a 1921 bear put spread. So even if we get a bounce here over the next couple of days, it doesn't really matter. The question is this going to break that support and head down to the 19 area? If the answer is yes, then that means that's going to be a nice gain on this trade. Sure, there's other trades you can make, but that's the one I'm looking to make. And then next, in the energy sector. The energy sector was a -1 over the weekend in the trading room. Same thing here. We have broken through support. We came down, we broke, we rallied back up. That support or that resistance held. And here we're moving back down. Yes, there's going to be some support here in the 22, 23 area. There's no question about it. I'm looking to make a trade 22, 23. So I'm just saying it's going to hang out here. Could you do a 23, 24 bear put spread? Yes. You're going to pay about 60, 65 cents on that, which means you only have about 35 cents of upside. If you want a little bit more upside, the 22, 23, or you could even do the 22, 24. Not calling for this to really break down, but definitely looking to hold in this lower area just for the next few weeks. Let's take a look at tomorrow's outlook. Market volatility is rising. One of the things we also got over the past 24 hours was President Trump said that yes, the Canada and Mexico tariffs are happening and they are happening next week. Now look, we already went through this news once and it was pulled back at the very end and put on a delay and the market rallied and cheered. But the market was worried going into it. Same thing here this week. The market is worried that these are going to get put in place and really slow down economic growth and provide a boost to inflation. Will it happen? Who knows? Again, this president is very untraditional and very difficult to call what he's thinking on a day-to-day basis. So we'll just have to wait and see. All of that just means uncertainty, which the market doesn't love. So we are seeing market volatility rising. And I think those tariffs are the next big news that we're going to get until the Friday core PCE inflation report. That's going to be the next big one here. So I'm looking for this market. I think it probably goes a little bit lower, maybe bounces a little bit. We do have NVIDIA earnings after the bell tomorrow. That's going to be a big deal as well for the market. So again, just volatility. I don't have a clear call on the market direction. And if you've listened to me at all, you know that I'm very clear when it is clear. I said, look, we're 100% this way, 100% this way. Right now, it's just not clear. Lots of moving parts and pieces, earnings, economic reports, tariffs. So look, all of that's just going to mean a more volatile markets. Well, that's it for the market roundup. Thanks for joining me. Goodbye, everybody.